So really interesting session already today. We've heard from vanadium, we've heard about lithium. Everyone's really riding this EV battery thematic and the broader energy transition. But in order for the world to decarbonise through electrification, the one thing that is required is copper, and we need a lot of it. And as investors, where do you go to actually get exposure to the copper market on the ASX? Oz Minerals is gone. Jagrusta's finished. Half of Queensland's pumping water out at the moment. There's really limited opportunities to go and get exposure to genuine, pure copper plays with either in production or near-term production capacity. But that's exactly what Hillgrove Resources offers with the Kanmantoo Underground project. So if you're not familiar with Kanmantoo, it's located just out of Adelaide, only 55 kilometres out of Adelaide. It was mined from 2010 to 2020 as a series of open pits. During that time, we produced around 140,000 tonnes of copper and over 55,000 ounces of gold. Over the last 3 years, we've been drilling below the base of those open pits, just chasing that same mineral system down to depth. We now have a fully funded underground operation that has commenced, and we are ready to produce copper in the first quarter of next year. All the infrastructure we need is already on site. This includes processing facility, tails dams, workshops, and the like. So everything is all in place, and we are operational, and we will be the next copper producing asset on the ASX. Very quick corporate snapshot. We're sitting at the moment with a market cap of about $130 million. We have $35 million in cash, so EV of about $95 million. Just keep that in context as I outline the value proposition. The only other things on this slide I did want to draw your attention to is we hold $235 million worth of carried forward tax losses. This obviously becomes very valuable as we get into free cash flow generation early next year. And in addition to that, we hold over $17 million worth of franking credits. This has enabled us to distribute over $50 million in fully franked dividends at the appropriate time. Great jurisdiction, so we're just out of Adelaide, 55 kilometres. Access to market is only 70 kilometres away at Port Adelaide. It's actually at Port Adelaide we transfer ownership, we receive the receipts, the payments for our copper concentrates. And having that quick payment turnaround really keeps our working capital requirements down low. Operating in South Australia, we've got a government that really understands the value the resource industry brings to the broader economy. This has been recognised on numerous occasions. Most recently, a couple of months ago, Fraser Institute again released their annual report of mining investment attractiveness. South Australia in the top 10 once again. So genuine tier 1 opportunity. Being based in the beautiful Adelaide Hills, only 55 k's out of Adelaide as well, we're in the Adelaide Hills wine region, so attracting quality employees and retaining them has not been a problem as we've started the ramp-up process. People are working even-time rosters on competitive pay, but they're home every night. There is no fly-in, fly-out at our sites, and so we've been inundated with calls for people wanting to come and work at a start-up operation where they can be home every night and their families have access to top-quality education, entertainment, sporting, and jobs that the broader Adelaide region has to offer. Excellent relationship with the local communities of Callington and Kanmantoo. We've built this up over 20 years of operating, from exploring the open pit operations all the way through the rehab. They've actually seen us deliver on commitments for operations and rehabilitation. You can't buy this with a few meetings at town halls. This is built up over 20 years of actually delivering on the commitments that we put forward. We're recognised regularly as best in industry with regards to our community engagement as well as our rehabilitation works. We roll this up into an annual sustainability report, and that is aligned with the GRI framework, and we map that to the UN Sustainable Development Goals and the ICMM. Very proud of this work. Would encourage anyone to go check it out. All the infrastructure that we need is already in place. This includes a 3.6 million tonne per annum process facility that we have maintained over the last 3 years in a position that we could immediately restart. So we kept the energy contracts in place, the water contracts. We pump water through the entire process plant and tailing system 24/7. We inch the mill every week. We run the crushing and conveying system on a weekly basis. We have all the critical spares that are required to ensure there is no long-term downtime. Tailings dam already in place. The permitted capacity not only houses our current mine plan, but also an additional 3 million tonnes. So as we continue to drill, expand the resource, expand the mine life, we already have the tailings dam permitted to be able to hold that additional material. Workshop in place from the open pit operations. It was designed initially to have large open pit trucks so they could have their trays fully extended. Absolute overkill for the underground, but a real luxury to have. Pit itself, fantastic asset, 360 metres deep, so we've got a haul road all the way down the bottom. It's effectively like a quasi-decline. We're able to get in and access those ore loads very quickly for very low costs, which has seen us be able to put together a mine plan that only required $25 million of capital to get to a positive cash flow position. Recently started mining, got underground. The competency in the rock mass is very, very good. That just really helps us to be able to turn these faces over very quickly, and we've immediately ramped up to our planned productivity rate. Only 13 metres in, this is a 5 by 5 metre drive. We're hitting the high grade chalcopyrite that houses the copper and gold mineralisation. So really great to see that coming through as per the model. And as we've been mining through that, stockpiling the ore on the ROM, ready to convert. I'll just throw up a few photos there just quickly, really just to highlight that we are a real company with real assets. There's not a handful of drill holes that need to go through years of permitting and hundreds of millions of dollars of capital. This is already in place and we are underway, ready to convert that copper that you see there in front of you into cash early next year. Just in terms of our funding, we have funded through equity. There is no debt within this business whatsoever. This is really important as we go into operations because, unfortunately, when you're starting up an operation, it doesn't always go as per the spreadsheet says. So we've taken additional contingency to make sure we work through that, but having no debt repayment schedule to meet means that we can adapt to any challenges that may pop up with the value maximisation of the project in mind rather than trying to meet some sort of artificial debt repayment schedule. Also, of course, having no debt in place means there's no covenants around things like dividends, and it makes it a lot easier to be able to push those out earlier than what otherwise would be the case under a debt model. We raised $38 million for a $25 million build, so plenty of contingency to make sure this gets underway and into operation early next year. But also what we've been able to do is concurrently continue to drill to expand the mine life. So we've got drill rigs on site at the moment, continuing to drill, and they have been for the past sort of 3.5 years. Just finishing off on the financing, we also put in place 16,000 tonnes of hedging lines. This is equivalent to about 50% of our first 2 years' productivity, provides some protection on the downside from a price point of view, but still plenty of exposure to a rising copper price environment. So project economics. We put a feasibility study out earlier this year. It was for a starter underground mine we call stage 1. So this is really just to get going, get cash flows rolling so we can then reinvest and continue to grow the mine life. But the project economics are really great. We have $200 million free cash flow over the first 4 years. We have an all-in sustaining cost of just over $8,000 Aussie. So current price for reference is about $12,500 Aussie. So we're talking about a 15,000 tonne per annum process with about a $4,500 margin. So you guys can do the maths, but it's generating plenty of cash over those first 4 years. Very, very short time to development because we have all that infrastructure in place and we are already down the base of the pit and already coming through the ore, as you saw on those earlier slides. And that just means we have a very low pre-production capital, $25 million. This is the lowest capital-intensive copper development project anywhere in the world, and it's well on the way of being delivered. And that all translates into a huge IRR of over 200%. We've all seen the copper thematic with regards to the energy transition and what this will mean from a supply-demand. I guess Hillgrove Resources is uniquely leveraged to the copper price in that we have a high-grade core that's surrounded by a lower-grade halo. So all of our stopes that we've designed, the underground production, they all terminate within low-grade mineralisation. If the price goes up, we can quickly respond by expanding the stope widths. You saw the strength, the geotechnical stability. We can expand those stope widths really quickly and basically present more ore to the mill. Now, unique to Kanmantoo is we've got a massive oversized mill. We're only utilising 40% of the mill's capacity. So as we bring that additional ore up to the ROM, we're not displacing any high-grade ore. We'd be effectively putting more metal into a higher price environment, which is a really unique opportunity that we have. So the stage 1 economics look great, it's all underway, but the real opportunity here is in exploration growth. So as I said, we have a surface rig on site at the moment. We've got an underground rig plugging away as well. We have another underground rig turning up on the 1st of August. And so we are busy continuing to drill to expand that mine life. And just in terms of our exploration success, over the last 3 years, we've drilled 136 holes. We've had 158 intercepts of economic grade and width. This is over 100% strike rate, which you're not going to find an explorer anywhere in this conference that's got a strike rate like this. Basically, every time we're drilling, we're hitting it because the alteration zone is very, very continuous in the Z plane. We've only had a handful of holes that have not returned a significant intersection. And importantly, every time we run a drill program, it's converting to an increase in the mineral resource estimate. So 2019, we started off about 1 million tonnes. We doubled it in 2020. We doubled it again in 2021. And at that point then, we continued to do some infill drilling, expanding the resource by about another 20%. And at that point, we said, look, let's get this into a feasibility study, get it funded and get it underway. But we didn't stop drilling. We increased another 6,000 metal tonnes into the mine that's not currently in the mine plan, but sits in our resource base. And since then, we've continued to drill for another 12 months. There'll be resource estimates coming out this quarter. Drill results were released last week. There'll be some more coming out next month. Basically, everything is still continuing. So what we have now is a project where every time we drill, we hit something, and every time we run a program, we're increasing the resource base, which is really quite exciting when we consider that on our mining lease that's already permitted, we have 9 areas, nine mineralised lodes, either been mined or mined or drilled as part of the open pit operations. Only 2 of those sit within the current mine plan, and those 2 remain open at depth and strike, as do the other 9 as well. So at the moment, we're going down about 250 metres below the base of the open pit, but I've actually drilled another 250 metres below that. Deepest hole we've got, 3 metres, 5 grams a tonne gold, 1.1% copper. So this system is still continuing down all the way through, and looking forward to continuing to grow the mine plan accordingly. As a bigger scale opportunity, what we're looking at here is a magnetotelluric IP resistivity chart. Effectively, up the top here, you've got the Kanmantoo Underground. So all that stuff I've just been talking about, little green box up the top, we have something much larger sitting at depth, and we're currently doing some infill MT work to better define that from a spatial point of view ahead of then a drilling program to understand whether we have something broader at depth. But we are effectively now drilling down. We're hitting the alteration zone within a couple of metres at 900 metres depth, a couple of metres of where we're expected to be. We're hitting that alteration zone, and this is just the down plunge extension of that same area. So very confident we'll hit that alteration, and we'll just see whether it's copper laden or not. Really great news flow. So from this year, we obviously delivered the feasibility study. We got going with we got the funding sorted out, and then we started the mining operations already up to that production level. We're right on track now for stoping, so the production operations out of the mine to occur in the final quarter of this year, ahead of then putting the mill back into operation in the first quarter of next year. Continuing to drill. Drill releases were out last week. We have some more coming out in about a month's time. We'll get a maiden resource out for a new area, currently not in any of the mine plan as well, and obviously the results of the MT survey, which will then feed into a future drilling program. So a really active but value accretive news flow ahead of us as we walk forward. So just to sum it all up, the Kanmantoo Underground is really quite unique. It offers low cost, low risk, near-term copper opportunity, one of the few on the ASX as a pure copper play to be able to deliver copper into the rising price environment, which we fully expect will be there in the next few years. Plenty of growth opportunity, which I've outlined in this, and when you consider we have an EV of only $95 million, I think represents excellent value. Thanks very much. We're located just near the outside breakout area. If you want to have further chat, be very happy to talk to you. Cheers.